Hello and welcome to this first lecture of this new section on accounting in business context in this course, Finance and Accounting Fundamentals. So in this section, we will give you some in-depth view of accounting in the business context. And there in this lecture, we will start talking about one aspect of management accounting, and that is cost accounting. So let's take a look at this cost accounting, which basically means analyzing cost of production and operations in accounting for business, right? So how do you think you can analyze cost of production and operations? Any thoughts? Anything that you know? So analyzing for cost of production and operation is first obviously important. It's an important process for businesses to understand their profitability, manage expenses and improve efficiency, because all businesses needs to be profitable. Then you need to manage expenses and you need to be more efficient than competitors. So that's where the role of cost accounting comes in. So what are the various steps that you can take to effectively analyze these costs? Let's take a look at them. So first, what you need to do is to identify the various cost components. And then there are what are the various types of costs. One we have is what is called direct costs. Now these are costs that can be directly traced to the production of goods and services in making, manufacturing, such as raw materials and labor. Then there are indirect costs. Now these include overheads or costs that are not directly tied to production but are necessary for operation. Say for example the utilities, rent of the factory, administrative salaries, etc. etc. Then the other two types of costs are fixed costs, that are costs that do not change with the level of production. And these are like rents and salaries of permanent staff. And then the variable costs, costs that vary with production level, including materials and a hourly wage. So a cost could be a direct variable cost, could be a direct fixed cost, could be indirect variable cost and indirect fixed cost. So the costs you could identify on these two dimensions as being direct, indirect and variable versus fixed. Then you need to do is to gather accurate data, collect cost data, right? And you need to collect the data from various departments, including finance, production, purchasing, and human resources, and anything else, anyone else who is relevant there. And you can use accounting software and management systems to ensure accuracy and consistency of the data that you've collected. Then you need to analyze the historical cost data, basically to do two things as we see here. One, to identify trends, and second, establish benchmarks for future cost analysis. Your current cost can become the benchmarks for the future cost analysis. So that's how you gather accurate data. Then you categorize it and allocate costs. You allocate indirect costs to products and services using a consistent method such as activity-based costings, ABC. Now this approach allocates overhead costs based on actual activities that drive the cost, activities-based costing. Then you categorize these costs, classify costs into fixed, variable, direct and indirect categories to understand their behaviors and impact on the total cost. So that's what the categorization and allocation of costs requires you to do. Then you calculate per unit cost for each product and services. You sum total direct and indirect costs for a specified period. If it is for a year, quarter or a month, you sum all the direct and allocated indirect costs. So direct cost that goes into production of that products and services, and allocated indirect costs. The costs that are not direct, you allocate on the basis of certain principles and you assign to that particular product or service. And then you divide, you determine the cost per unit by dividing the total number of the total cost by the total number of units produced to determine the cost per unit. Now, what does this do? This matrix helps in setting prices and evaluating profitability for each of your products or services, right? Because your profitability will depend on your profitability of products and services. So you need to know the cost so that you can determine the profitability of each of your products and services. Then you analyze the cost behavior. Now, how do you analyze the cost behavior? One of the dimension is fixed versus variable cost. You analyze how fixed and variable costs behave with the changes in production volumes, right? And there, understanding cost behavior helps in decision making and planning for different production level. If you find that your fixed cost dramatically reduces with small change in volume, you might as well increase the volume by reducing your prices and get the benefit. Then you do break-even analysis is another thing to do in analyzing the cost behavior. There you determine the break-even points where the total revenue equals the total cost. So you determine this break-even point. Now what does this help? Now this analysis helps in understanding the minimum production required to cover the cost. So break-even gives you the minimum production that you need to undertake to cover your total cost of production. Then you evaluate efficiencies and productivity. You measure the efficiency of production process by comparing actual output to expected output and identify areas where improvements can reduce cost and enhance productivity. Also, you can calculate labor productivity by dividing the total output by the total labor hours. A higher productivity indicate better use of labor resources and lower labor cost per unit. So that's how you evaluate efficiency and productivity. Next would be to perform the variance analysis. And there are two things you can do. One is standard cost versus actual cost comparison. You compare actual costs with standard cost, budget standard cost here meaning budgeted or expected cost, to identify what are the variances, where things are lower or higher. And then you analyze the reasons for variance to understand the cost drivers and the areas needing improvement. So that's how you analyze the actual cost versus the standard cost. You can also do the variance analysis of direct versus indirect cost, separate variances into direct costs like material labor and indirect costs like overheads, and that can help you pinpoint specific cost control issues. So whole variance analysis is to figure out why is the cost higher specifically. If it is lower, it is good time to celebrate and learn from there. And if it is higher, then you need to perform and understand the root causes and take action, management action. And that's where the finance people's analysis comes to extremely useful. Then you can also do ratio analysis, calculate key ratios such as cost of goods sold to sales ratio, right? And operating expenses ratios. And these ratios, what they will do is to provide insight into cost management and profitability. You then compare these ratios by benchmarking with industry benchmarks to assess your business's cost efficiency relative to the competitor, because you will need to do the pricing comparatively and hence your cost also must be comparative so that you can maintain a decent margin that is required for your business. Then you implement cost control measures. Now identify areas where costs can be reduced without compromising quality or productivity. And some of the examples could include negotiating better supplier terms, reducing waste, and optimizing production processes. Also, you need to continuously monitor, implement a system to continuous cost monitoring and review to ensure ongoing efficiencies and cost control. So that's how you can implement cost control measures. In doing all of these things, you can use technologies and tools. Utilize accounting and cost management softwares for real-time data analysis and reporting. And what these tools will do is they can help you automate or data collection and analysis and reduce errors, and that can save time for you. Also, leverage data analytics and business intelligence tools, right? They can help you analyze cost trends, forecast future costs, and make informed decisions. So use as much technology and tools you can to do these cost analysis. So in conclusion, effective cost analysis require comprehensive understanding of all cost components and their behavior by systematically gathering data, categorizing costs, and performing variance analysis and implementing cost control measures. You as a business can optimize your production and operation cost, improve profitability, and maintain a competitive edge. Regular monitoring and updating of cost data ensures that analysis remains relevant and supports strategic decision making. So that's how analysis of cost and production can be done and how can it help the businesses. So what do we do next? So in the next lecture, we will talk about another important aspect of management accounting, and that is budgeting and forecasting for the business. So thank you so much for watching this first lecture on accounting in business context. I hope you continue to learn new things, continuing to enjoy, and I do look forward to see you again in the next lecture. Please feel free to message me if you have any questions. I'll be happy to answer your questions, and do download the PDF file to take a look at anything that you want to.